Welcome to This Week in Coworking, where industry leaders get succinct, actionable insights.
Hey everybody, and welcome back to the This Week in Coworking podcast feed. I'm Hector Kolonas, and we are back with our first weekly recap for 2026. If you are a follower here or a subscriber, you will have remembered that last year we ended the year with a weekly recap, and we were joined by a guest co-host, William Edmundson, who's at iPostal1 Workspace. Well, William is back with us again to start the year off just like we ended it on a high note. William, how are you?
I'm doing well. Happy New Year to everybody watching.
And Happy New Year to you. Did you manage to get a break, or were you on call throughout the holiday? What was your holiday like?
Our business has been on fire at iPostal1 with both of our products. Workspace Mail is really catching fire. And so, you know what? If I'm not going to get a break, that's a good reason for it.
So when you say on fire, that's a good thing, right? Coming from a technical perspective, when I hear something's on fire, I'm like, the server's on fire, call the fire brigade. You're talking about a completely different fire.
I guess you could use that term either way, but no, on fire in a good way. You know, people are realizing that having virtual addresses as part of your revenue stack, it's no longer a well-kept secret with the Premiers and Pacifics and other operators like that. A lot of folks are diving in and they see the revenue.
Absolutely, and that actually brings us to the first item I wanted to discuss with you. At iPostal1 Workspace, you truly believe, and we agree with you, that 2026 is the year for growing virtual mail revenue. But before we talk about what's happening in 2026, let's talk about 2025, right?
Sure, absolutely.
Saying that there's going to be growth without looking at numbers is neither here nor there. For folks listening in who maybe haven't been following or haven't been doing this in their own businesses, how much money did iPostal1 Workspace put into operators' pockets last year?
Oh my God, it's amazing. The money that went into the operators' pockets was actually over 5 million, 5 million, 3 and change. You know, that's some serious money.
Yeah, I mean, that's additional revenue outside of everything else they're doing. And that's, from what I remember from your numbers, is that's not including money that they've then generated using your Workspace Mail solution to service their own members.
Exactly.
This is purely just from the revenue you generate for your virtual mail customers, right?
And the iWorkspace Mail product is just our white label of iPostal1, same award-winning technology platform. But what it does, when I was an operator, I thought, well, this is great. iPostal1 customers have this great platform that can check stuff on the app. Why am I not doing that for my own members? And this gives the opportunity for that, and it's really starting to grow.
That's amazing. But iPostal1 and Workspace, or iPostal1, has been around for a while now, right? Let's go a little bit even further back in 2025. What did the numbers look like, 2023, 2024, 2025?
Yeah, so when I came in 2022, we had about 209 locations. We've grown significantly since that. Jeff Milgram, our founder and my boss, hired me as a consultant. One of the things I said is there is a gold mine in the workspace area because this is something that they need. And it's something I, as an operator, used across office company stores and franchise stores. We have grown between 45 and 50% in the number of locations per year. And I've got a dedicated team that understands co-working. And Wendy, McKenna, Richard are really good. We've hired a new person, Nick, who comes from time in the industry. And, we're there, we're focused, we speak the language, and we get it.
Yep, you definitely do. And I mean, that's amazing growth, 50-ish% year-on-year growth since you've shifted that focus to support more operators. And I mean, the numbers speak for themselves. I mean, $5-ish million is nothing to be laughed at. It is definitely a valuable additional revenue, but why are you so excited about 2026? Like, what is the opportunity that lays in front of operators who maybe have been on the fence about adding virtual mail services?
Yeah, Hector, a lot of people have been skittish about it. The really good operators have been doing it. And, for example, on the iPostal1 product, there's zero acquisition cost. We do all the marketing. We do the 1583 work just for their approval. So it's easy. It takes only 30 minutes per 100 customers that we've sent them. And to me, it's not why should you do it? It's why wouldn't you do it? And I think, Hector, you cornered me at GWA in Chicago, and you had ridden with some people in an Uber, and they were talking about the opportunity of virtual mail. And one of those people is an iPostal One partner, and he started talking about the revenue that they're getting and how easy it is and how responsive my wonderful team is. The other guy, as you predicted, he came directly over to me. He's like, why don't I know about this? Why aren't I doing it? And I kind of laughed and I said, well, it's not for lack of me telling you. It's just now you're getting the validation from your friends that you know and trust, and it's meaningful money.
Yeah, it absolutely is. And it actually leads me to my next story. We just released this week our next Undercurrents edition. So for folks who maybe listen to the weekly recap but don't know everything else that This Week in Coworking does, Undercurrents are our sort of deep dive into emerging trends that we feel operators really need to know about, because it will drastically change the way that they build their businesses and scale their businesses. The topic of this week's Undercurrents was actually the new revenue stack, and we sat with 6 operators from various types of co-working spaces to really dig into where is their money coming from. Is it all from private offices? Is it memberships? Is it on-demand products? Or is there something else that they're doing that is adding significant revenue? And virtual mail came up a whole bunch, both in the video, the audio, and the written version. So I highly recommend heading over to This Week in Coworking, going to Undercurrents and finding that, or going into the newsletter for week 2, 2026, and finding this in the discussion section. What was really interesting about the Undercurrents was how so many people admitted that they were surprised by virtual mail revenue. And that is why I completely agree that 2026 is absolutely a year for people to really think about, how do you get more involved? How do you get more visibility, more discoverability? But also, how do you systemize that revenue so that you keep more of every dollar? It was very interesting to hear from Megan, who says that they have to offer mail and they make revenue from mail. However, the unit economics in her mind as the COO didn't make sense yet. And that just really highlights this need to implement better technology, better systems, better processes around these kinds of revenue sources so that you are getting better unit economics. You're making more profit per dollar as opposed to just kind of breaking even with servicing this.
There are a lot of people, Hector, that don't give it a chance. They try virtual mail, maybe on their own packages, maybe with a partner like iPostal One. Money's not going to fall out of the sky. It takes time to build. I was pulling together a report of revenue the last quarter for one of our partners with about 20 locations. And you can see each month the revenue goes up at each location. And it's a function of time, but because the churn is so low, it's a compounding revenue stream that just keeps going and working for you.
Yep, absolutely. And I mean, it's pretty much a global trend as well. While speaking to Toby over at Cubes.co over in Australia and their network, they were saying that when they acquired Workspace 365 Victoria and turned that into corporate cubes within their group, his mind was blown with how much they were making from virtual services, or what they called virtuals. I think the number he actually gave me was combined, the virtual revenue equaled one of their centers, right? So they were making the same amount as opening a new location just from virtual services across the acquired entity. They're now rolling that out into all their entities. So the opportunity is absolutely there. What's most interesting is people are starting to realize now, I think it was Sheila over here in Jersey City who was saying that it's not only a good revenue source, but it's also solving a need. She didn't realize how much entrepreneurs and freelancers needed personal addresses. It's a really interesting thought process, seeing how people are waking up to this idea, whether you're in the suburbs or in big cities or you have great addresses, there's always a market for virtual office products.
There is, and I'll tell you that people don't come to work every day. And one of the things that's really helped us with both iPostal One and iWorkspace Mail is to be able to check your mail on your app. All the junk mail's screened out. Everything's there. You can see it and decide what you want to have happen to it. No longer are you hopping in the car and driving to the location. When I was running a chain called Abbey, we had people that would drive in several days a week, or they would repeatedly ask, is my mail there yet? Is my mail there yet? And that's not good for your team. They want that peace of mind. And if you realize what some operators are learning now, which is bake digital mail, like I post a one on my Workspace mail, into your rates and have it be included and give it to all of your members, you've got incremental revenue streams. Every time they touch that app and want something forwarded, or every time they want something shredded or what have you, you're making more money, and the time it takes is absolutely minimal.
Yeah, very well said. I would counterposition that I do want people coming into my space because they can acquire more meeting room space and other packages like that, but keeping my team off of the phone, keeping them out of their emails, absolutely. Plus, every time, as you said, they are actioned to do something, you're getting paid for additional revenue on that. Absolutely a great revenue stream.
One thing that some of our operating partners have been doing is making sure that as we deliver them new customers, we don't give leads, it's customers, that they make sure the customer understands that, hey, by the way, we will give you member rates. We've got meeting rooms. We offer the following services, day offices, etc. Every little bit helps when you're adding up at the end of the month, right?
Absolutely. So going back to the undercurrents, we did share some really interesting data coming out of all 6 operators. What does a revenue stack look like, broken down between private offices, membership products, on-demand products, and everything else? So definitely go have a look at that. I think it averages out to like 72% offices, 8.8% traditional co-working memberships, 7.2% in kind of on-demand meeting rooms, day passes, that kind of thing, and then 11% into these additional resources. Now, it's not only about virtual mail. We saw some really interesting additional revenue channels added and discussed in the undercurrents. We had a soda machine that costs 8 cents a glass, but we're being sold at $10 a head per person per day. We're seeing revenue around concierge services, ordering flowers for Valentine's Day, helping people get food and beverage for their meeting rooms, stacking additional services to their landlords, to their neighborhoods, managing other amenities. So there's all this discussed in the undercurrents. So definitely go and listen to that in your podcast feed right next to wherever this is. So go and dig into that as well.
It's really insightful, and there are so many things you can do to get a little more juice out of the squeeze at your center. And
Absolutely.
Even using some of the tools that help you use dynamic pricing in your conference rooms. But services is great, and making sure your team is offering to order food or to have coffee service when you sell a meeting room.
Yep, absolutely. And what's also interesting is we also asked them what surprised them in a bad way. What did they expect to work really, really well? And it didn't. It flopped. It didn't convert well. You know, one example was selling chargers, right? Because people forget their charger and they need it, but you're also in a hospitality business. They're going to walk up to the front desk, say, hey, have you got a charger? And they're going to get a charger. So it was very interesting to see that all play out. But I want to move us on to the next topic, William. There was a piece from Andrew, who is currently COO at
Portal Warehousing.
Portal Co-Warehousing, that's correct. And he's also just started a new entity where he's helping other companies with their operations. And he put together the fact, just a note really, that if you have 100 KPIs on a dashboard, you're not really tracking anything.
That's exactly right.
You are just looking at a dashboard and hoping that it all is green and all going up to the right, but you can't actually action that when you have KPIs. And the company that he's with is actually called BizOps Studio, just to give them a hat tip as well. He went from 15 plus KPIs to just 4. I know you've been in operations before, William. You said you agree with this. He mentions that he tracks occupancy, churn, OPEX, and engagement as his defining KPIs. What say you?
Well, I learned a lot of things from a business system called EOS, Entrepreneur Operating System. And one of the things it does is it has you very focused on your KPIs and what objectives and timetables. And The thing that I really liked about this article is, yes, you still measure all of those things, but you focus. Like with my team, I focus every week. We have our meeting and we focus on 4 or 5 KPIs. If one of them's off track, we take a look. And I'll give you an example. I like that Andrew is using occupancy as one of his KPIs, but having come from decades in the hotel industry, that's a two-way street looking at occupancy, because high occupancy can signal a problem. So my comment is that measuring the occupancy is great, but if it sways too high or too low, you want to know why. Is it a matter of your rates off? If your occupancy is above 90, you need to think about, do I need to increase my pricing? Because clearly there's opportunity. You're the best judge at your own center of supply and demand. But if it's low, then you want to take a look at how is your salesperson doing. Maybe go on a tour with them. Let them treat you like the prospect. Maybe it's cleanliness. Maybe it's a service issue. And how about talking on a regular basis with your members and asking them, how's everything going? Tell me what you like, but tell me what we can improve.
Absolutely. Very well said. I think you did touch on a very important topic, that a KPI can cover up the underlying issues. Right?
Yes.
And so knowing that, yes, occupancy should fall naturally between this range and not just always trying to push it up is definitely going to help you build a stronger business with just better margins. So I completely agree with you on that. On the idea of selling desks, right? There was another great link this week from Anne-Marie Murphy from Baseworks over in Ireland, where she really just laid it on the table that a lot of operators are still just selling desk and Wi-Fi and not really focusing on what is the person coming into the space using the space for. Is it to get away from the house full of kids? Is it somewhere where they are building their dream business? Is it somewhere where they are coming to meet new people? Understanding why they're coming to your space and selling to that is going to be a lot more successful than selling a commodity of desks and Wi-Fi.
Absolutely. Anybody can sell a commodity, but if you're selling a commodity, that's all you're competing with. And I know the people that take the time to read This Week in Coworking care more about that. They know that there are other components like hospitality, and they know that it really is, what's the overall experience, Will? And just to add one thing to what Anne-Marie said, in my experience, it's great to think about the outcome, the smoother week, the team culture, all of the things that she talks about. But I think it starts even earlier than what she mentioned. It starts when somebody comes for a tour, or when you're talking to them about coming for a tour. It's that needs assessment that really needs to happen. It's sitting them down in the meeting room and finding out, what is it they really need for their business? Do they really need an office, or is a virtual plan or a bundle of hours what they really need? Because if you sell them something that's not the right fit for them, you may not retain them. I think that consultative approach really takes Anne-Marie's concepts and helps it align it sooner.
Yeah, I completely agree. I think also improves the conversion rate, right? If you know
100%.
what you're showing a person, if someone's like, oh, I'm coming in for a podcasting business, and you happen to have podcasting rooms, but you don't show that, that's an issue, right? But knowing why they're coming in, connecting them with members. If they're coming in to build their network and you focus more on introducing them to 3 members than showing them that extra meeting room in the back of the center, that's going to improve your conversion rates tenfold, right?
That's exactly right. And that needs assessment just tells you, where do I need to focus my time? And if I know what somebody wants before they come in or have an idea, there are certain members I'm going to introduce them to. And I'll, of course, clear that with the member before.
Of course.
It's not just about the stuff.
It's absolutely not just about the stuff. So I'm looking at our time. We've got a couple of minutes left to
Sure.
let everyone get back to their week. What I wanted to dive into is This newsletter this week is absolutely packed. It has got a couple of weeks of news and data drops and tech updates and thought pieces in there. So of course we cannot cover everything. You can go and find that newsletter and drop us comments on social media or send us a message on Instagram about what you think of the different pieces, and we can discuss that offline. But in the data section this week, there was a whole bunch of great drops. We saw some info coming out of, where are corporate companies looking to expand? How are they looking to expand their space? 44% are saying that they're going to use co-working spaces instead of expanding and acquiring more space. That's
Absolutely.
a fantastic number. We saw some numbers coming out of Fiverr and Illuminous looking at the US freelancer economy and how much revenue they're generating and where they're generating and where they're concentrated. So if you are serving the freelancing market, go and look at that data set. See if there's opportunities for you to serve that market and better support them. I think they said in 2024 there's something like 6.9 million skilled independent workers in the United States.
And growing.
Earning around, and growing, definitely. And earning, I think it was $319 billion in revenue per year. So absolutely a market. It wasn't there in the beginning of co-working. It's definitely there now. So check that data set out as well. There was also two different sort of trends pieces, one coming out of the team at Space Spring, where they interviewed around, I think it was through 200 or 300 operators at Co-working Europe, and kind of put that into a report. And then there was Office R&D's trend report following their webinar that they hosted at the end of last year. I think some of those caught your eye, William. Is anything that you really wanted to highlight before we round out today's episode?
Yeah, I think all operators ought to be aware of these things. I mean, we just closed out a year and we're all looking forward. I spent a good amount of time on the Office R&D report. They always do a nice job. And, things like 5 operator ready trends. I would read those and see not just what you're doing, but what are other people doing? And you can validate some things. You can come up with new ideas. There's talk about benchmarking, different practical takeaways. And I find it to be helpful. But one of the things that really is an important thing to keep in mind is actually a couple things really stand out. One is the revenue per desk. When I was in the hotel industry, it was RevPAR, revenue per available room. Didn't matter what you charged for a specific room. It's what were you taking the bottom line?
Yeah.
Because if you look at a bank deposit slip for your co-working space, nowhere is there a space for occupancy, right? It's about dollars. So maximizing what you do, packaging, adding digital mail service or other products that can help you have incremental revenue is great. I also think it's important for everybody to read the part about consolidation and the rise of managed and turnkey flex. And one thing I want to say is, just like an individual operator can't call on a Fortune 500 company and get their call answered, you need to go through aggregators to have a shot at that. I think you need to know where the boundaries are. And if you're an individual operator, a landlord with commercial buildings is not going to give you the time of day. So I say stay in your lane in a positive way. Focus on what you do best. If you're keep it in mind that way, and let the premiers of the world work on these deals where the landlords want to do the big deals and multi-unit deals and so forth.
Yeah, I mean, we are seeing a lot of indie or smaller group operators punching above their weight, and the only way they can do that is by having well-tracked numbers, knowing exactly what makes your machine work, and being able to show that you're optimizing over time. Landlords, just like the bank, don't care about what kinds of memberships you sell, where your revenue comes from. What they care about is the lifetime value of the average member at your space, paired with the hyperlocal economic impact of each of your members. How much are they spending at the restaurants? How much are they spending at the cafes down the road? What are they spending on lunch every day? How do they get in and out of your space? Are they paying for parking? Are they not? Those two numbers, you can go up against some of the biggest in the industry because you can track those numbers far better than they can at scale. So just to build on what you were saying a little bit earlier, is definitely, stay in your lane, kind of pick your battles, but come armed with data that makes you unique. You could probably win some of the deals you probably weren't expecting to win.
Building off of that, Hector, is make sure your landlord knows that you're an asset to their building, that your meeting spaces are available to anyone in the building, and you could tell them that they'll get a member rate or something that makes it even more appealing.
Yep.
Fill that void, let them know it, be an asset to them.
Yeah, that's actually a very good point, and it's something that Toby mentioned in the Undercurrents as well. In many of the buildings they've gone into, whether it's even the named partner on the building, they've actually got rid of any client-facing area of their office, and they use the co-working base as where they meet their guests, where they take them for meetings, where they host events. And so they are now, as you said, an asset in the building. Therefore, by positioning themselves like that and showing that they are cost effective to manage these and revenue generating, they were a no-brainer for these landlord partners. So completely agree with you on that point.
Good. Well, I do encourage everybody to, particularly this time of year when these trend articles and kind of consolidated information, you don't have to read it all right away, but read it as you get time. I even printed out a couple of these, so at my leisure, I can read them or refer back to them.
Absolutely. And as always, This Week in Coworking will be there to make sure that anything else that comes out, we congregate it and deliver it into your email inbox at 6 a.m. every Thursday. So you can always go back and get links directly to the source. We never link to gated content, so you can make sure that you get and peruse that data. Just before we sign out, if you are technically inclined and you're in the IT headspace, do go and check the article I added from Syncaroo, where I dig into the glowing opportunity and potential risks of vibe coding within your team. But definitely go and have a look at it, because just like millennials came into the industry or came into the work industry, basically internet native, having used the internet before they got into the work world, and then Generation Z came in with kind of mobile knowledge. They were using apps for everything. They knew how the phones worked, way beyond what the millennials did. The next generation of the workforce will be AI native. They will not only expect, but they will feel that they have to use AI in their workflows. So think about that as you start making your 5 to 6 year plans. William, thank you once again for supporting the podcast, supporting the newsletter, and for co-hosting with me today. Anything you want to drop before we step out?
If people want to add additional revenue to the revenue stack, you can find out more about iPostal1 and iWorkspace Mail at iPostal1workspace.com. And then a lot of the things we talked about are going to be addressed. I'm going to be speaking at the Co-working Operators Weekend, which will be in Raleigh, Friday 6th and 7th. And that would be worth looking into if you want to take a look at hearing from other people in the industry.
Absolutely. Thanks again, William. Thanks.